Welcome to the Essential Tax Podcast with your host, Mishkin Santa. In each episode, we'll take the complex world of tax, all the jargon, acronyms, and stuff that make your eyes glaze over, and explain it in an impactful way to understand the complex and unknown areas. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcasts, Spotify, and on our website, thewolfgroup.com. Now, here's the host of Essential Tax Podcast, Mishkin Santa.
Okay, hi everybody. I am super excited for today's podcast. So my name is Mishkin Santa. This is the Essential Tax Podcast. I have here with me today the two original partners for the Wolf Group. I've got Len Wolf. I've got Bob Len. We're going to go through kind of the origin story of the Wolf Group. Anyone that knows me knows I'm a big comic book fan, so I love my origin stories. And I'm super excited to hear the origin story of the Wolf Group. I specifically am excited to hear the, kind of the genesis of how the Wolf Group came into Nexia International Network. And then I've got some questions related. Obviously, we'll do some tax stuff here. We won't just do all non-tax stuff, but I've got some questions about tax that I think the audience will find super interesting. And then last but not least, I kind of want to ask some big picture questions just about running a business, a small business, how to be successful at doing that. I think there's a lot of value in kind of understanding your story in regards to that aspect. So to get started, we'll start with you, Len. Can you give me some background, kind of, where were you born, kind of, where did you go to school at, your credentials, tell us just a little bit of your backstory.
Sure. I was raised in the beautiful town of Jersey City, New Jersey, and I was born there, raised there for the first 4 or 5 years of my life, and then we moved down to more the central part of New Jersey. Spent time there through high school.
Okay.
From there, I went to college in central Pennsylvania at Penn State University, and then returned to New Jersey. I found out that I was sort of hanging out with the same people I was hanging out with in high school, and I was around the corner from my parents, and I had such a great experience going off to college and being independent that I wanted something similar. Again, I didn't want to revert back to where I was and with the people, all the people that I was with, and doing the things I had been doing. So found the DC area as one that appealed to me. Had some friends, some fellow alumni from school that had lived in the area, traveled to DC after college, lived in the area, and really enjoyed it. And so visited and decided this was where I wanted to spend the next bunch of years. And
that's after you got your accounting degree?
Correct.
Okay. What made you want to become an accountant? Or what was there a driving force there? What made you choose that path?
Yeah, interesting. I had an uncle who was a professor, not at Penn State, but a professor, and he counseled me. He said, you're interested in business, okay. There's business logistics, now called supply chain, I believe, for the most part. There's business law, there's management, there's accounting, whatever. He says, I would pick a discipline that's a technical discipline, where you can get some professional credentials, so as opposed to management. Anybody can call themselves a business manager. In accounting, you are going to be certified, presumably. You will have a technical professional skill that will transcend a number of career opportunities. So he encouraged me to choose accounting, and that's really why. It was all about Uncle George.
Okay. Very good for Uncle George. And you, Bob, can you give us your backstory?
Thanks, Mish. Yeah, I also grew up in New Jersey, in Wayne, New Jersey, which is in the northern part of the state, and spent my whole life there until I went to the University of Virginia. I got a bachelor's degree in commerce with a concentration in accounting. And then I also came to the DC area. It was sort of a natural progression coming from the middle of the state of Virginia to come up to the northern part. After school, I worked for Touche Ross, which is now Deloitte.
Yeah.
And then I joined Len in 1988. And sort of my path to accounting was pretty interesting, I think, sort of emotionally. I went down to Virginia thinking I would get a humanities degree. I really enjoyed writing and reading and those kinds of things, but this was in the early 80s, and my brother was 3 years older than me. And when he graduated from college, it was in the middle of the big recession in the early 80s, and he couldn't get a job. It took him 18 months. He had to move back with my parents. And back in those days, there was a big stigma about moving home after college and living with your parents. And I started thinking about like what an English degree might get me in that kind of an environment. And when I was looking around at school at different opportunities, as Len had mentioned, getting a technical degree pretty much guaranteed that you were going to have a job when you got out of school. And so I went that accounting route. And then, it all worked out from there.
I want to come back to both of your answers on that because I have a really important question about people that are currently in school. But just to dovetail off of what you were saying about the English degree, you write a blog for the Wolf Group Capital Advisors. Do you find a lot of enjoyment for that? You've been doing that for quite some time.
Yeah, so I write this blog called Are We There Yet?, which started in the second week of the pandemic because I found that people really lost perspective pretty quickly about life and what they were doing, and they were panicking. It was just, I was trying to make it as a distraction, and I thought it would last for 3 or 4 weeks. And now we're 4+ years into this process. And what I hadn't expected was the enjoyment I get out of it. Yeah. It's cathartic to read about things that may or may not have a finance finance component, or a concentration on finance and focus, where I can talk about things that are important to me and important to my life and what I think will help other people.
Cool.
So so I've gotten to apply that early enjoyment in writing and reading into this, although I'm in a technical field.
Yeah. I think anytime you can kind of bring in something that you have a passion for and you can incorporate that with what you do, it makes what you do a lot,
Absolutely.
And I find that that's part of what drives me when I do practice development, business development, is I'm always incorporating things that I love doing into that. Tell me, do you guys have any funny stories from your first job as an accountant? I know I have just kind of a, one-off stories I always like to tell when I was first kind of doing my profession. But do you have any specific ones? I think you've told me several ones where you were working and.
One of my first, I was on the audit team at Coopers & Lybrand.
It's a good firm. Or was a good firm.
It was a good firm. Merged into PwC, PricewaterhouseCoopers, of course, some years later. And one of my jobs was to audit Nabisco, the cookie cracker company. And that was at about the time when, and I don't recall if it was Arthur Young or Anderson, but there was a big fraud in the accounting/audit industry, whereby a company, a big food manufacturing company, had defrauded the auditors by taking a full silo of ingredients and filling essentially the silo with water.
Oh no!
And about 8 inches of oil, and claiming that this was all soybean oil.
Oh no!
So 1,000 liters of oil, and so of course the auditors wrote that down as the equivalent of $4 million worth of inventory when it was mostly all water. So they send me up at the top of one of their silos as an auditor, and I had to measure how much oil was in this silo. Well, I'm like right out of school. I didn't even know how much was in a container of Crisco oil. How am I going to tell how much oil? Of course, there are markings inside, but you can hardly read those. Now they use like sonar type, devices
to test it.
Yeah, to see how much of the oil. And that wouldn't have told the full story if there had been a fraud and the rest of it was water, right? But it was just the humor of sending a 19-year-old up there at the top of a 5-story silo, looking in and trying to establish how much metric, whatever the measurement was, liters of oil were in there. With the backdrop being this firm was recently charged with this fraud, this major fraud. I'm like, I've got to make a decision here that could have millions of dollars of impact on the financial statements. I don't really know what I'm doing, and have no idea what's behind or below the couple inches that's at the top.
Right.
Yeah. Well, I don't have a lot of stories from that time at Touche Ross, but I've got a lot of stories from when Len and I started working together. But I think we're going to get into that later.
Yeah.
So you can move along.
So just to get the timeline correct here, so the Wolf Group started in 1983.
Correct.
Okay. So, I think I just heard the story that when you came to DC and you were working with BWM or BDM, and you kind of said, look, I want to do 50% of my time with BDM. The other 50% of the time, I'm going to be starting my own firm. So that was what, 1982, 1983?
83.
Okay.
Yeah. So when I left at BDM to hang out my shingle, as they say, I didn't have any clients. I was with a defense contractor. BDM was a defense contractor. So the Department of Defense had no need for my services as an independent CPA doing some tax work and some nonprofit audits at the time. But then Scott Yancey, a friend of mine, left BDM as well. Started at a firm. He was a CFO of a telecom firm, a British telecom firm. And he was devoid of a management team when he got there. So he was doing the work of the CFO and 3 or 4 senior managers. When I hung out my shingle, he said, Len, I know, we work together. I know what you can do. I could sure use some help. And I was like, well, I could sure use some money because I have no clients. and so I'm really kind of tired of eating peanut butter and jelly sandwiches and hot dogs at home. So we came up with an arrangement whereby I would assist him in fulfilling the duties of his management team, which he was devoid of at the time. And he would give me the flexibility, hours-wise, to establish my practice, to have time to establish my practice. So he asked for 40 hours a week, but I could work Monday, Tuesday, Wednesday, 13 hours a day, and then take the rest of the week off. I could leave anytime during the day to, work with somebody selling me a tax library or working with a prospective client. So I had complete flexibility. And then as he filled in his management ranks, he needed me less than 40 hours ultimately when he got more and more of his managers on staff. And as my practice began to grow, I couldn't give him 40 hours a week because that my primary goal and objective was to establish the practice. So it was the perfect seesaw. I was able to pay the rent and buy some food.
That's good.
Exactly. And establish the business. And as I say, it was a perfect seesaw. When he ran out of the need for me, I had no need, for that opportunity.
Was it called the Wolf Group originally?
No, it was called Leonard S. Wolf CPA.
Okay.
And then when I hired my first employee, decided to change the name to Leonard S. Wolf and Associates. And now I will note that it was Associates, and we only had one. Those of you, my clients that perhaps were around at that time, that's a secret, I suppose. So you're just learning that now, that it was Associate and not Associates. But it sounded much bigger and much more.
And then you met Bob in 1988?
Right.
1988.
Okay. And so Bob came on, and then when did it become the Wolf Group?
Well, it was Leonard S. Wolf and Associates for quite a while. What year we actually converted
2010,
to the name
maybe?
of the, yeah.
Oh, wow, so that's much later on.
Yeah.
Okay. Wow. Okay. And so you connected with Bob. I'm going to switch gears here for a second, guys, because what I really want to get into is how you all started traveling abroad, meeting the folks abroad. You had such a strong, I remember when I interviewed at the Wolf Group, I was just so impressed by the network, the Nexia network, and kind of everything that had been built up there, the kind of offshore. And I think that's one of the real big value adds for the Wolf Group is that, and sometimes I feel like this is when I'm at the Wolf Group, I'm kind of Grand Central Station where people are coming in and say, I've got a problem in India, or I've got a problem in France, who do I talk to? And I'm like, okay, you're going to hear like 3 referrals of people and that, and we can do that very, very nimbly and quickly. But tell me kind of how you guys first connected with folks offshore. I want to get into the original network that you guys were in, SCI, Nexia, kind of progression there. So why don't we start with Len, and then maybe Bob, you can fill in a little bit.
Yeah, well, so in part because I was working with this gentleman as the CFO, him being the CFO of this British telecom company, they were bringing in a lot of British expats to the U.S., to their U.S. operation. They were establishing an operation in the U.S. for the first time. They were bringing a lot of British telecom folks, engineers, as well as C-suite folks to the U.S. And I was, again, starting my practice and getting into some tax issues and whatnot. And they started asking me questions about expatriate tax, because these were Brits working in the U.S.
Right.
Now they were subject to the U.S. tax system, as well as perhaps in many cases the British tax system. So it was something that not a lot of CPAs out there were able to assist them with. And I just learned a bit about the process and started advising them. And one thing led to another, and I started to establish a bit of a repertoire of knowledge and experience in that area, international and expatriate taxation, where more than one tax regime is in place and there are international transactions involved. And then so subsequent to that experience, I ran into a woman who was in-house legal counsel at the IMF. So she was like an ombudsman for the IMF staff. So any legal issues that the staff had, they would go to her. Everything from I need to get a credit card to I want to get divorced. How does that happen in this country? I'm being sued. We don't sue people in my country. What's that all about? You know, any and all legal issues she would, and some of those issues were tax. And so she would call me and say, yeah, I've got a client here, has a tax question. I'm an attorney, but of course I don't practice in all these areas of law and tax. Could you help us out? And I had some knowledge by that point in time working with the Brits, you know, the inbound expatriates from the UK. Now the World Bank and the IMF folks, they're of a different type. They're on a different visa. They're taxed differently in the US. But in some respects, similarly, they're inbound expatriates, citizens of the country, inbound to the US. And so I parlayed that knowledge of working with the Brits to the service of the international organization employees who are inbound from a whole host of countries all over the world as delegates to the World Bank and to the IMF. And then when that woman left the IMF as in-house counsel, she introduced me to her successor, and her successor introduced me to her counterpart at another international organization. And before you know it, I had several international organizations, the World Bank, the IMF, the OAS, and eventually the UN in New York, reaching out to me for information on their employees that were primarily inbound to the U.S. and ultimately for their American employees who are outbound on mission to various different countries, doing the mission of the bank and the fund and the OAS in other developing countries around the world.
And so back then, that's typically called global mobility tax services. Did they call it that back then, or did that come later on?
Yeah, I would say, I mean, maybe not
expatriate taxation.
Yeah, but
it's always been called that.
That term developed, not that long after we started the practice. It's been called that for a little time.
Yeah.
And then
global tax.
Len tapped you to teach.
Well,
folks,
so
or?
I joined the firm in 1988,
okay.
And so it was December of 1988, and it was just at the start of this connection with these international organizations. And of course, I had no experience with anything international really in my career. And I joined Len on my first day. And I remember the exact date. We talked about it just recently, December 12th, 1988. I come into the office, I get settled, and Len says to me, well, what do you know about non-resident alien taxation? And I said, I don't know anything. And he said, well, you got to learn it because I signed you up to do a seminar for the Staff Association at the World Bank on January 20th of 1989.
Yeah.
So there's nothing that will make you an expert faster than the fear of standing in front of 400 people talking about a topic that you think they know about, but you don't know anything about. And of course, what I found was that I could learn it in 6 weeks, and the audience really didn't know anything. Right. So it ended up being easy, but it was a rather large group. And since then, we've been doing, and I still do the pre-retirement seminars at the World Bank. And people are sort of amazed when they say, well, how long have you been doing these? And I said, well, I think I did my first one in 1989, and it's a little shocking. But we were able to grow that business, the global mobility practice. And it's amazing that, among all the accounting firms in the U.S., there's a very select few that deal with these issues. There are some of the much larger firms, but a lot of the smaller firms are sort of closed out. There's a barrier to entry because the amount of knowledge that's required, it's just difficult to attain. And so firms look at it and they say, you know what, I don't want to go there because it's too much learning and I don't have the time to do it.
Yeah.
We were lucky because Len had the time. at the start of the firm.
What I see a lot of times is they may know of some of the rules or issues, but when practically it comes down to putting pen to paper, they're like, oh, I'm not touching that. Like, I got to find the Wolf Group or someone similar to that.
And you're always worried about what you don't know as much as what you know and communicating that.
And today we get a large portion of our clients through other related professionals, through other CPAs, attorneys, and others that, again, this is just not an area that they've committed time and energy and resources to. And I remember very early on, Bob and I sat down and we just said, every organization ought to have specialization, right? Whether you're in accounting, you're in a profession, you're in trade, whatever, you do something different than the rest of the team, right? Or you're just one of many. And we decided that international and expatriate taxation was something that we'd like to be in. We thought it was interesting. We thought there were very few firms.
We got to travel
doing that. We got to travel, but more so, I think, even more important than getting to travel is we made the strategic decision, frankly, to travel. Right. We were a small firm, so how many small 5 or 6 person CPA firms are just kind of getting started in the U.S. decide that they're going to travel internationally and develop an international network? So we traveled several times a year to Europe and elsewhere, and other firms were looking at us like, why do you spend all that money to travel internationally? But I think it made a big difference because we did establish international. And today we're like, we are recognized and sought out internationally.
And early on, we realized that you can do one side of the equation, but if you can't do the other side, it's not that helpful to the client. So we thought, like, okay, we need to get some counterparts overseas. And that was probably in 1989 or 1990. We did a trip. We went to the UK and we went to France, I think. And we interviewed probably 5 firms in the UK and probably 7 in Paris.
And how did you know which firms you wanted to interview, or how did you figure out?
For you young guys, there was this thing back then that was called a phone book.
Okay, so
because there was no internet, there were no computers. We used the phone book and we looked up firms and we came up with a list. We called them ahead of time to see if we could schedule meetings.
Okay.
And we came up. We met. We had a UK firm. We had a Parisian firm, and we had a guy in Munich.
And did you have like a presentation prepared when you went in and talked to them, or
we just said, here's what we're trying to do.
Okay. And they were some of them were obviously very receptive to it.
Yeah.
Yeah.
And some of them were looking at it, it's like, what are you doing here? Yeah. Or they, we couldn't speak French and they couldn't speak English.
Right.
Or they spoke British English and we couldn't understand what the heck they were saying.
Right.
But in some instances, we were working in a league that was a little bit outside or above, or
we faked it pretty well.
We would go to dinner, and I think some of the folks that we would be connecting with were accustomed to, again, the bigger international investment firms and big 4 firms coming. So so when we handed them the wine list to select the wine, and the wine started at like 700 euros, we're thinking, no, we're a small firm. we're not among the big 4
This
guys.
was so long ago. There wasn't even a euro.
We wanted to sound big and appeal, and incredible and international travel. But then when push came to shove, we were like, we're a small firm.
Yeah. Please don't pick that bottle. Please don't pick that bottle.
We had to sweat it out. We sweated out a lot of meetings.
How are we going to afford to get home, Bob, if they ordered that bottle?
That's right.
So I think there was specifically a French firm that you guys really had a great connection with, and that was part of. And so for anyone that doesn't know, there's, on any given day, probably 30, 40 different accounting networks. Most people I think know E&Y, Deloitte, KPMG, which called the Big 4 used to be, I think, the Big 8 at one point in time. I doubt most people know anyone below, maybe BDO, RSM. But there are a wide variety of networks, and then there are associations and all sorts of things. And a lot of different CPA firms and accounting firms belong to these different groups. But at the point in time that you guys are talking about, you kind of made an association or an alliance with a French firm and a couple other firms. Can you tell me a little bit about that story, about how that came into being and the acronym that they came up with?
Yeah, sure. So, we were so small, frankly, that even joining one of those networks,
we couldn't get in.
They weren't interested in a firm of 5 people in Washington, D.C., and they probably had other representation in the area as well. So we said, we'll just form our own network. And we, through our travels in Europe and elsewhere, and again, I was working with a lot of Brits at the firm that my friend had me contracted with, and then working with the international organizations, the World Bank and the IMF, you got to know some accountants who were serving our clients abroad. The home country client, the home country professionals, and so we decided to start our own little network. So we connected with some of those firms that we knew and had been working with. One, like Bob said, in Germany, one in France, and one in England, and started our own little network. On a trip over from France, the two French guys, I think they had a few drinks on board the flight, and they decided to name the network, our little network of 4 firms. They called it Slalom.
Slalom.
Because they're French, and they're skiing the Alps and, and all that. And Slalom stood for, do you remember? I believe it stood for Saving Lots of Taxes Legally.
Yeah, right. It was something like that.
Something like that.
And they made a logo even, which looked like this cool skier coming down a slope.
It was saving a lot of money.
Legally.
Yeah.
Okay. Yeah.
Right.
All right.
And that started our that gave our network a name.
Right.
And we met, just like the bigger networks, we met periodically in Europe. And
what year was that when Slalom was created? Do you remember?
Ooh,
the 90s?
It was in the 90s, yeah. It was in the early 90s, for sure. And about 4 years into that, this firm in Paris, Cefico, was approached by SCI, which was one of the larger networks. It was in the top 10. And they got approached to join and be the French firm for that network.
For SCI.
And to their credit, and we owe them, they said, if we come, the Wolf Group has to come with us.
Okay.
Because again, that network wasn't otherwise interested in us. We were a small firm.
We were too small.
And they had several hundred professional staff in Paris. They had offices in Lyon.
Oh, it was a big firm.
Right. They were a big firm already.
And they said, we're not
joining
unless
and
we bring
SCI,
those guys.
SCI said, okay, these guys can join. I remember Tom Marino, who was the head of SCI at that time, came down from New Jersey and interviewed us. And he said, yeah, you guys are in. He was the head of at J.H. Cohn, now is Cohn Resnick.
Okay.
And so that got us started with SCI. And then in 2007, and I happened to be on the board of SCI during a stint then, Nexia, I think both networks approached each other about doing a merger. And we attended their conference in Dublin in Ireland. And then I think we were in Mexico City for our international conference, where we presented it to the SCI member network and said, we're going to move forward with this merger. It's good for all of our firms who are in it. And that's how we ended up. And again, that was 2007.
Who was on the board with you for SCI? So it sounds like it's Tom Marino, so Cohn Resnick, Wolf Crew.
Alfredo from Mexico City. Solana. Yeah. Wasn't Norbert? Norbert New, who was in Germany, and Marcus.
So Norbert would be DHPG? Was it DHPG?
I think so. And
Norbert was, DHPG.
I can't remember Marcus's last name.
Stoltz.
Yeah, Ebner Stoltz. Yeah.
Okay.
And then it might have been Mike Beattie from Safri Champness.
Okay.
No, Clive Nicholson, I think.
Or Clive Nicholson. Yeah, that's right.
Okay.
That's right.
Wow. So those are the SCI folks, and then they merged in with Nexia. Right. I think we were at a conference for Nexia maybe about a year ago where they were talking about that story, and they were kind of having the A teams or the A firms and the B firms, and kind of who was contributing and how they were going to add it all up. It's a super interesting transition story.
Yeah, and like all those transitions, I think, or mergers, somebody has more of the power.
Right.
And in this case, I think it was Nexia had more of the power, and they made some decisions about how the board would be constructed. And we had some pretty strong personalities. We mentioned Tom Marino. He was a leader in the industry, and he did a great job representing SCI to make sure that we had our say and had our seats on the board and those kinds of things. So
and we were proud to win the Nexia Firm of the Year award in 2012.
2012, we hosted.
And you hosted the conference.
We hosted the conference in DC.
Our gala dinner was held at the Air and Space Museum.
Yeah.
Of course, this was all planned and paid for by the Secretariat of the Nexia network. Because
we were still pretty small. We weren't going to be paying.
I was going to say that's a pretty massive undertaking.
Exactly.
Exactly. But it was quite an accomplishment, frankly, you know, and we were quite proud of it because, again, still a small firm. I don't know how many we were there, less than 20 people probably, and again, the network had a couple hundred firms, or 150 firms in 250 countries, and was one of the top 10 networks in the world. So we were really excited about that. We knew we arrived at that point.
Right.
So fast forward here to 2024, and I'm a big fan of the Nexian network. I love it for a couple of different reasons. One is, again, you have to have the coverage, the foreign coverage, because we have so many cross-border, whether individuals or businesses, and it takes that collaboration. And we just, for example, did a global tax analysis for a client that's a U.S. person living in Australia and then wanting to set up kind of a structure for an operating company in Australia, which they always like to give out holding companies and, you know, your superannuation, which always should, if there's a crink in it. But without that coverage, I'm not sure we could have gotten that client what I thought was a really great result, kind of understanding about how to do that structure. So first and foremost, that's why I love the network. But then secondarily, there's kind of that movement of work and referrals between the different entities and the jurisdiction. So, you know, a lot of times we get tapped on the shoulder saying, hey, you know, we have folks that are going inbound into the U.S. We need, you know, help doing their pre-immigration tax planning. We need help doing their tax compliance work. So there's a good exchange of clients that we're working on together. What are some things that you guys love about being, or did like about being in the network, or that you found valuable about being in the network when you transition from, say, Slalom to SCI or SCI to Nexia?
Yeah, well, I've always said that an affiliation with a network like ours is essential because, you know, the last thing in the world I want to do is save a client American taxes at the expense of a higher tax abroad, right? So, you know, all these transactions, there are two sides, right? To it. There's the one side often in the States, and there's another side abroad. And again, I can minimize the U.S. tax for them, but in so doing, I might expose them to a higher tax in Europe. And America has had lower tax rates for the most part, still do, than the Europeans. So we had to be very conscious of how we serve our clients and that we serve them best. So we needed no firm can be expert in every country's. You know, it's hard enough staying expert in our country's tax law, let alone every country's in the world. So it was essential that we have that network for that reason, if for no other.
Yeah, you know, the thing that I think gets lost sometimes in this is that, and this is for the people watching who may be young professionals, is that in trying to come up with your passion for what you want to do, being a part of this network makes us global citizens. So we learn a ton about other cultures. We develop friendships in countries that we may never visit, and learn about their lives and how they grew up, their stories. And for me, it's really exciting to be able to have these friendships and to have a better understanding about the way the world works, more so than just how things happen in Washington, D.C. or in Cleveland, Ohio, or wherever it may be in the U.S. It's a big world, and there's a lot of interesting things that go on that we've been able to learn. And what I love about first SCI and now Nexia is that there's a good match of the sort of the character of the people.
Right.
So there's a high level of integrity. People return calls quickly and get back to you quickly. And everybody's friendly. So if I hear that somebody's coming into town from Nexia, it's open. You know, call me. I'll set things up for you. We'll go out to dinner. I'll show you around. I'll introduce you to people. Whatever you need. And when I go abroad, it's the same thing. Yeah. They're willing and able and happy to help.
Right.
So it's really, I find that that's part of the network that we don't talk about a lot, but it's just sort of the result of these working relationships that we have in all these countries.
Right. Yeah.
And I know you found that through your, Murray over in Australia.
Oh, yeah,
who I just dealt with the other day. Tom.
Oh, really?
Yeah.
Yeah, Tom. Yeah, he did the secondment, which I know we're really big on. But yeah, Murray and his family, actually, they're from Brisbane, Australia. They came to the U.S. for a family vacation. They'd never seen snow, I guess. And so they came during the winter time, and they really wanted. They came to Dallas. They were in a couple different places in New York, but they came to Dallas. They stayed at our house. We went to a Stars game, so we saw some hockey. We watched the national championship game, which was not that great, by the way, that year.
Yeah.
So, but it's an interesting, impact. And I know you've had a lot of those experiences too, where you develop really close personal relationships with the.
Yeah,
people.
and just culturally, societally, sociologically, it's really uplifting.
Yep.
Bob alluded to it, but it's like the veritable, UN General Assembly when we get together at international conferences, and in fact, that's one of the reasons we chose the SCI network, which merged into Nexia. They required us to attend these international conferences. Right. So many other networks, you'd put your name on a directory and you'd call the guys and say in Brussels, and you'd say, I'm so-and-so with Wolf Group in Washington, D.C. We're in the directory on page 17 on the third column near the bottom. Whereas now in our network, we know the people we're dealing with. We've worked with them. We've had beers with them. We know their spouses or significant others. It's a whole different relationship, and we're able to bring a level of service to our clients because of those relationships that we wouldn't otherwise be able to bring. And it, again, is uplifting in that we go to these conferences and we have Indians talking to Pakistanis. We have Egyptians talking to Israelis. We had, before the crisis in Eastern Europe, we had Ukrainians and Russians, talking to each other as friends and colleagues.
Yeah.
And that alone, I thought, was very uplifting.
Yeah, oh, that's great. Okay, shifting gears here, because this is the Essential Tax Podcast. So this is a softball question, I think, that I'll throw out there. But I think every tax practitioner or person in the accounting field, I think, always ends up with one area that they're really good at or they really like for one reason or another. I think for me, it's foreign pensions. I remember when I got I think maybe you asked me or Dale asked me, Mish, can you train our staff do a training on foreign pensions? And the first one I did, I thought I did very poorly at. I was like, okay, I don't know nothing about this topic. I know very little about it. The Wolf Group specializes in pensions for the international organizations. So when I first did it, I kind of took it as a challenge. I was like, I'm going to do this again. I'm going to get better at it. Like you said, there's nothing, when you teach it, you learn it the best. And now today it's like, I love talking about foreign pensions. I can talk about defined benefit, defined contribution, whatever it is, till I'm blue in the face. And I'm sure my wife will roll her eyes 6 ways to Sunday when I'm talking to someone about it. But what's your favorite area of tax? If you could just pick one, either code section, area, specialty, just one thing that's kind of always gravitated that you said, oh, I know that, I like that, I like talking about it.
I would say, not to throw numbers, but code section 7701, it's the code section that establishes residence, the definition of who is a U.S. tax resident. When we serve individuals, particularly high net worth individuals, but certainly when we serve any individuals, the very first fundamental question that has to be answered is are they a tax resident in the United States by statute, or are they not a tax resident of the U.S.? We have a lot of clients that don't fit the typical mold, so you might think that they would be resident because of how much time they spend here, and then find out that when you read the intricacies of that code section, they're not resident at all, or vice versa. You don't think they're resident, and it turns out they are in fact residents of the U.S. And that establishes, how they're going to be taxed fundamentally. We have two tax systems essentially: one that applies to U.S. citizens and residents, and one that applies to non-residents of the U.S. that have U.S. connectivity of some sort and perhaps transactions with U.S. assets, income in the U.S., etc. So, and the code section is interesting to me because there's so many exceptions, and then there's exceptions to the exceptions.
Right.
And there are exceptions to the exceptions to the exceptions.
Yeah.
So sometimes you have to go down, 3 or 4 or 5 levels, and it's challenging because if you stop at any one of those levels and don't go to the next level, you get the wrong answer.
That's right.
It's one of the longest code sections I've ever read in my life, and even trying to find the citation or remember the citation, multiple times I have to go check it out. Okay, B52A.
Right.
It's extremely long, but that's great. I like that one too. What about you, Bob? Do you have one?
So it's really the more broader case of what Len was talking about with 7701, but it's just the non-resident alien taxation, because you've got not only the question of are they non-resident, but then you've got to figure out their sources of income, where they're sourced, how those incomes are taxed. There's exceptions for interest or certain types of dividends or certain capital gains. And you've got different rules that use all the same words but are interpreted or defined differently within that code section. So I find it really interesting, and I find it's just satisfying to be able to work with a client and to be able to demonstrate to them not only our depth of knowledge in these areas, but how we can then structure a strategy that's going to help them to minimize the tax, and that they can be comfortable that they're not breaking some kind of law by doing some tax minimization strategy.
Well, and that plays into a lot of what you do these days, which is the wealth management. And,
Right.
you know, I talked to a lot of G4s. So the G4s would be the G4 visa for international organization employees. Right. That's what they're normally on. They're non-residents, you know, just to drill it down. They're non-residents for tax purposes, generally speaking. But, you know, I always, it's interesting when you talk to G4s these days, and they're always interested in investing, right? And putting money
Sure.
into investments. And, you know, one of the questions I always have is, what did you guys give any kind of investment or wealth management advice back in the 80s and 90s to the G4? I would assume the CDs and the interest income was kind of the big,
Right.
You should do that.
It was very broad.
Yeah.
And if they were going to invest in, say, markets, there were ways to do it to try and minimize tax. But the biggest one is what you referenced was with interest income, that there's a significant exemption from tax on interest income. It's generally for financial institutions, but also for registered bond obligations, but it doesn't apply to mutual funds where there are underlying bond fixed income securities. And that's a really hard concept for somebody to say, I own a bond fund, but I've got to pay 30% of my dividends. But if I own those bonds outright, I pay zero. And that's the way it works. So then structuring that, and then the second part is, you know, the execution on that strategy of what custodian can you use and how do you go about purchasing these securities is always interesting.
And cap gains.
Yeah, capital gains. Yeah, there's all kinds of nuance.
Which is what the last 30 years has kind of been in. They're investing in the stock and in the capital gain. Now we're back here with high interest rates again. You see kind of reverting back to...
Yeah, so we are seeing that on that side of the business, that the fixed income world looks a lot more interesting, because if you can get 5% completely tax-free, it's the equivalent of getting a capital gain at 7-8%. So, you know, whereas the risk associated with those stock investments is much higher than the risk associated with investing in a U.S. Treasury bill.
Right. Okay. All right. So I've always said, in my experience with Len, maybe you've observed this too, but I always thought Len would have made a better attorney. Because a lot of times I deal with Len and the responses he gives to me, I'm like, wow, that's really insightful. It's almost like I'm talking to a fellow attorney. So I'm an attorney by trade. I've got that license. But if you could do it all over again, maybe I just answered the question for you. This is a question for both of you. If you could kind of go back in time and talk to your 17, 18-year-old self and say, and you didn't have the option to do the Wolf Group and be an accountant, right? You had to choose something else. What would you tell your younger self to maybe get into or do?
Well, first and foremost, I think it probably would have been being a police officer, because I love sirens and flashing lights and having people.
The 3-year-old in you came out there.
Having people move aside when you were coming up from behind them, and yeah, so that was really very appealing to me. But on the professional side, when I realized I wasn't going to be a cop because I wouldn't be very good at it, I would say, I enjoyed law. I enjoyed business law in college. I think I do have that right brain mentality that most accountants have. You know, my creative side on the left side is pretty weak. My technical skills to parse words and understand the meaning underneath the words, and shall and will are different, and all these adjectives and adverbs have different connotations. I enjoy the language, and I enjoy the language as it's embedded in tax law, and the logic and the rationale behind reading statutory law and trying to reach a conclusion based on every word. And I just enjoyed that. And so I probably wouldn't be a very good litigator, because I don't know that my oral skills are on par with my writing skills, but I would be writing lots of briefs and enjoying it, and they'd probably be pretty decent. Just don't ask me to testify in court.
I see that a lot. We ask you to do a lot of trainings with our staff on some of the tougher code sections that need that parsing. You have to understand how to parse Internal Revenue Code 72, for example. That's one that I think you have to, if you just try to read it and you don't understand how to parse it, you're going to come up with some really wacky results there. 7701's, I think, another one there too. So very common. What about you?
Yeah, I think this is why our partnership was so strong, because I'm very different in that regard. I think that, like understanding what rules are and how to do them. But I derive most of my satisfaction out of sort of working with the client to be the detective to figure out what's their issue and how am I going to solve that issue. And that's very satisfying to me. So it may not be, and obviously now I'm running the wealth management side, so that's probably where I would have gone, but I don't think I would have gone a different path than what we did. Okay. Because the depth of knowledge that I gained by being on the accounting side, which was attention to detail and deep listening, you might not get if you're just, the classic path in the wealth management area was you were selling products and cold calling. You were not necessarily taking the time to learn that much about the clients. You were on this one, then you were moving on to the next one. Whereas the way we've developed the firm, the Wolf Group side, and now Wolf Group Capital as well, is there's deep listening with the client. Well, what are you trying to accomplish? And let us help you accomplish it. Now, the big difference between tax and wealth management is that in tax, most of the time, the idea is that you're trying to minimize tax, right? That's the goal. On the wealth management side, at least the way we approach it, it's, how are you going to achieve fulfillment in your life? And that doesn't necessarily mean you're going to pay the least amount of tax or accumulate the most wealth. It's what's this journey going to look like for you? And how are we going to help you go on this journey and give you that freedom to make these choices? And I think for me, that's not very different from what Len likes doing with getting into the code section. I'm digging into somebody's head and trying to figure out. You're
parsing at a different level.
Emotionally, like, where are you at and what are you trying to do?
Right.
And I think that's why Wolf Group Capital came out of the Wolf Group, was because I had that sort of passion to go to that end. And we still are very tax focused. So, and we've got the support of the Wolf Group. But I think that's where, my passion lies for sure.
Right. So it's going that extra mile above and beyond what the tax step is really meant for.
Right. Yeah. The tax is a subset of this whole wealth management piece. I think I would have been a therapist because I just liked and it goes to my writing. A lot of it helps me explore myself through somebody else's, I'm looking through my eyes at them and trying to figure out, why are they behaving the way they're behaving?
Right.
And that helps me try and figure out some of my own internal emotions.
I see. Very cool.
But both sides, I think, are detective work.
Yeah.
We're just not cops because we wouldn't be good at it.
The New Jersey Police Department missed out big time.
That's right.
We do have to get lights, though, for our cars.
Yeah.
It's silence.
Okay. How long have you guys been partners at the Wolf Group for? When did you guys become?
I think 1990 or 1991.
Yeah, it was 2.5 years after you joined, so it would be 1991.
Okay. And I think if we just zoom out for a second, my big question here is, because you guys have been doing it for a very long time, as far as running the Wolf Group and being business partners together and just operating a small business, can you tell me, like, what makes a good partnership work? What happens when you have disagreements? Like, how do you settle those? What happens when you have big issues come across? I think a lot of new business owners or people that are just becoming partners together, they say, oh, it's okay, we'll deal with it, we'll figure it out as we go. But then when you're tested on that, there can create some uncomfortable situations, uncomfortable conversations. Some people don't know how to approach or do that. I think I'm trying to gain some kind of wisdom from how you guys have been able to achieve that and really operate the business as you have for such a long period of time.
Yeah. I'll start. I'll start with the basics. The start. You can maybe take it up from there and into something a bit more. Some of the issues that are a bit more contemporary. But when we started the practice, I think we're very in tune to ensuring that the way we structured the practice was a way in which we were not set up to compete with one another, but rather to cooperate with one another. So unlike a lot of professional service firms that have sort of silos, you've got your clients, Bob's got his clients, I've got my clients, other partners have their clients, and we work within those silos. Essentially, we decided from the start that wasn't the model we wanted. We wanted there to be the Wolf Group and the Wolf Group clients. as opposed to my clients, his clients, the other person's clients, and how that translated into, I think, more efficiency and effectiveness in client service was that if, for example, just to illustrate the point, if I was working on a client that was most important to the firm and with the tightest deadline, and Bob had his, plate full, but he didn't necessarily have a client at that moment that was the most important client in the firm with the most difficult deadline to meet, he would come to me. He wouldn't even come to me. I mean, he would just know that I was working on it. He would just offer his assistance, and we would work on it as a team. And similarly, if the next month rolled around and the situation was reversed, I would say, Bob, you're working on this ABC client. I'm aware of that. What can we do? It was always we. Yeah. It was never I or you. It was always we. And I think to this day, we refer to we way more often than we refer to you did this, she did that. Now it's we did this, we did that, we could have done a better job than this, we need to get better at that. It was always the plural. And I think if you compare again with law firms that are set up very differently, I think that really benefited us a lot. We were set up to kind of complement one another and to cooperate with one another and work as one firm. We're the Wolf Group, as opposed to Bob's clients, my clients, and everybody else's clients. And then we compete with one another. Who had the most sales? Who had the most closes? Who had the most?
As a we, though.
Yeah,
you're competing, but just in a good way.
Yeah. But
competing with other people, not with each other.
With other people, not with each other. Yeah. So it didn't matter that Bob brought in more clients to the firm in a given year, but I served more clients that year, or vice versa.
Or whatever.
It just our skills were complementary, but no more important than the other. So again, we weren't competing for import, for value relevant to one another as to the firm's value, and I think that made a big difference.
I love that answer. I think that's a fantastic. That's
and I think if you look at the law firm model where they've got like who originates, who serves, who does this, who does that, when you think about life in general, we talked about it at breakfast this morning. Things are good and sometimes things are bad, and you've got to try and create stability, and you don't create stability by having an incredibly complex set of rules as to who gets paid what. If you're all looking forward and saying, if the firm does better, we all ships rise in a rising tide.
Right.
You can do that. And I think part of it is also, and I wouldn't say we don't have egos. I think we have healthy egos, but we sort of, you check them at the door a little bit and say, is it possible that I'm going to be better if I just have an adverse relationship and then strike out on my own at some point versus, hey, we can build this thing and everybody prospers and you can take satisfaction in that. And that requires patience because we didn't always agree on everything, but we sort of had a hierarchy where, hey, I'm always free to say what I want to say, but this is that person's decision. And I'm not going to have an ego about it if they decide that they want to do it a different way. And I think we both did that. And I think that you and Jen are the same way as a partner group. And I think that for any organization that wants to stay together, that's the way to go. Now, would that generate the most total net profit over time? Maybe not. Maybe there's things that would have happened differently, but it could have blown up the firm too. So I think that you've got to keep that perspective.
And when you do set yourself up in a competitive environment, right? One of the first things I think you do in these other organizations that are set up in that manner is as I was suggesting before, Bob say just hypothetically, Bob's bringing in more clients to the firm, and I'm serving more clients of the firms, and Bob at some point in time starts thinking, if I didn't bring in all this work, we wouldn't have a business. And I'm thinking, if I didn't do all this work to the satisfaction of our clients, bringing in all these businesses and then losing them a month later and establishing no goodwill is not building a practice. We're going to implode at some point. So recognizing that what he's doing is as valuable as what I'm doing, and him recognizing that what I'm doing is as valuable as he's doing, and not trying to quantify and measure and compare the two. recognizing that you're of equal value. And I always said that if at any point in time we conclude that we don't recognize that, Bob is not contributing nearly as much as, then we split the part, then we break up. Then,
and you're like the Beatles,
we don't function dysfunctionally at that point, we did. We set up the agreement that we could split and keep the shirts on our backs and not end up in litigation. And we just agreed to disagree at that point in time and then divide. It's a lot easier on the staff. It's a lot easier on ourselves. It avoids litigation. It's easier on the clients if that were to happen. So that's the contingency. Of course, it never happened. And it was less likely to happen because of the way we set it up.
And I think, overall, from a very broad level, it's about respect, right? Mm-hmm. So if you have respect for the people you work with at all levels, you tend to avoid conflict. When people don't respect each other, I think that creates more conflict. Or if they don't listen to each other. But again, I would put that in the same sort of definition of respect. Respect means that you listen to somebody's concerns. You're not prejudging how they are, or what they're doing. You're hiring people because you trust them, they have integrity, and now you're going to have that basic level of respect. And it helps avoid a lot of conflict along the way and keeps a firm together. Because there's not a lot of firms that, we're 40 years. There's not a lot of firms that have had a partner group that's together for 40 years.
Yeah, it's a long time.
Yeah.
That's real.
And Andrew, you get to all the way forward to today. So I'll be retiring very shortly from the firm. And a lot of people will ask me, well, what's going to happen in the firm? What's going to happen with your clients? And I think I didn't build the firm. We didn't build the firm that way.
It's not about me.
I'm going to be missed because
you'll be missed. Let's not say that. But
I'm not losing all those clients. Those clients aren't being left at, and we developed them as the Wolf Group clients, and this fabulous, spectacularly capable people around us, and that was the whole idea of the thing. So I don't want the firm to miss a day, and I don't frankly want to be missed in that sense. That there's a problem. You left the firm with a problem because you didn't establish the culture adequately, or you didn't establish a resource of middle management adequately. Or I think all that's in place. I'm not a plan for a long time.
Poor Len.
Okay, switching gears here. We only got a couple more questions to go. And I know you're retiring here, but this is one that I would love to get your insight on, and obviously, Bob, same for you. You both kind of were around when the 1986 tax code was either put, when they did their 13 months of bipartisan, I stress the word there, bipartisan collaboration and implementation into 1987, 1988. You both have been through the Tax Cuts and Jobs Act of 2017 and kind of everything that's happened over the last 8 or so years. We now foresee, more likely than not, that there'll be some kind of new tax code or updated tax code here in 2025 because the Tax Cuts and Jobs Act is expiring. Any advice on to what you would tell someone if they came to you and said, I want to do long-term tax planning, or I'm planning on doing a very big thing here, and what's your advice on how to deal with kind of the changing nature of U.S. tax and the potential new tax code that we're getting into based off of your experience in those two other areas? And I'm sure there's been a lot of amendments and updates and big changes in between there, but any advice you'd have for somebody on that?
In the broadest sense, I would just say that over the years, we've seen so much of an effort towards tax simplicity. And every time they enact a new tax law or revamp the entire tax code, they always underpin it with the objective of simplicity. We're going to make it simpler. And of course, with each of these, major tax pieces of legislation, everything gets more complex. So nothing better for the tax practitioner than for them to change the laws as frequently as they do. Not necessarily the best for society. And frankly, we don't even relish all the changes because that means we have to unlearn and relearn, and the firm can't necessarily monetize all of that training. So no one wins out of that. But what is true and what is sustained is that every time they're going to come up with one of these major tax law changes, there are going to be major disruptions in the system, and things are going to get much more complicated and complex. I don't know if that answers your question, but I think if that's the lesson that comes out of this, it's a good one. Things are going to get worse. Things are not worse, but things are going to get more complicated. they're certainly not going to get simpler.
I think what I would say to the client who's coming in who wants to do this planning, especially if their situation is relatively complex already without the tax law, is that to understand that Congress writes a law, then they give it to the IRS to come up with the rules and the application, and there's often a ton of ambiguity. So you hear about that, well, the law is going to be this way, but as a practitioner, you have no idea of how that's actually going to get interpreted and what the rules are going to be like. And so you've got to talk to the clients about, you've got to have a little bit of patience. You've got to understand that there's this ambiguity. So the journey to that tax planning strategy is not you give me a set of facts and I tell you what to do. It's we build a scenario of here's what it looks like and here's some planning. Now we're going to get some more information about how it's going to be implemented. That planning may change. So I think there has to be a lot of patience around trying to figure out what is the ultimate application going to be for whatever that law change may be. Because I get questions now about on the estate tax side, the exclusions may be cut in half.
Yeah.
And you do hear a lot of, and I don't know if this is true or if it's just a lot of drama being created, but people are doing all kinds of things, setting up trusts and transferring assets. And what I say to my clients is, we have no idea of whether those cuts are going to expire. It's more likely if one candidate gets elected that they're going to go and extend those. And even if the other one gets elected, who you think would be more apt to let the cuts expire, there are so many nuances into the, what any elected official is trying to do that you don't know what they're going to do. And so to start incurring, tens of thousands of dollars in legal fees ahead of knowing anything, just on speculation because you think you know what a candidate's going to do. I mean, listen to any political campaign. How much of what they say they're going to do they actually do? It's very, very little. And usually it's nuanced when they do it, and it may not be, executed or put in place the way you would have expected it. So I think people just need to be patient, and I know clients don't want to be. They want to know the answer. They want that certainty. But unfortunately, it's tax law, and when it's first written, we have no idea of how that's going to happen.
My favorite one of all time was, I remember they had some senators come down and give a speech. I think it was at the Tax Foundation, and they were like, "It's going to be a postcard. The tax return is going to look like a postcard." And I'm like, "There's no way." Yeah, how many lines do you have on page 1 and page 2? Well, then, sure enough, when they came out, there was 6 schedules. So it was the 1040.
It was a postcard with 7 pages.
Yeah. and so I'm like, this is going to be impossible to show the client how it goes through all 6 schedules back to the postcard.
How many pages is with the K1?
Yeah.
How many pages was it replaced with?
With the K2 and K3, you have 20 new pages on top of that. Yeah.
So it used to be a
2-page document.
Yeah. Now it's 20. Defix, and to follow on Bob for in terms of what's enacted, and you really don't know what it says because the IRS has to regulate it and determine how to implement it. We have temporary regs that come out 5-7 years after the enactment of the law, and then those temporary regs sometimes are on the books for years, even longer than that, and then you get permanent regs sometimes 15 years later. So I mean, it could be a 20-year period between the time the law is enacted and Congress and the IRS tells you how they intend to implement that law.
Yeah.
Okay, so if you were to talk, so recent stats show that the accounting majors are down 20 to 30%. So basically the moral of the story is a lot of younger folks, the Gen Zs, my children, which are, I guess they're calling them Gen Alpha, they're not choosing to become accountants. And if someone that was in college right now doing their accounting degree came to you and said, should I keep going with this? I'm hearing, artificial intelligence is going to take my job anyway in 20 years, or they're kind of giving you the negatives. What would you tell them? What would your response to them be about the accounting profession here and now in 2024?
Yeah. I would just say that no one knows the future, right? And And it is true that AI is going to have, and data analytics in general is going to have a huge impact, undoubtedly, on the accounting profession and just about every other part of our economy, every other business enterprise. But so too do the suppliers revise and change their focus and their methodologies and all that. So I think the accounting profession will change itself to meet the changing demands. So I don't think it'll necessarily replace the accounting profession. I think they will adapt to where they are needed, and they'll get more into data analytics, which they are already. The big four firms are hiring a lot of data analytics folk.
So that could be an area that you would maybe subspecialize in.
Yes, but I see it as a subspecialty. It's still an application to accounting and finances and financial reporting and taxation and all that. And unless and until all that goes away, there'll still be the need to bridge that technology with the applications that are required of the day. So again, I think the demand will change, but I think so too will the supply protocols change. And I think you see that in a lot of industries. Telecom companies that were just in telecommunications, AT&T, you wonder how they're going to survive, when people put down their phones with cords, and now they're into data, they're into mass data analysis. They're doing different things. So I think the profession will change itself and modify what it is that it does and how it does it. So I would say I'm not bullish nor bearish. I'm no different than I was, but I think there's a place for accountants in a changing world, including a world that changes with AI.
Yeah, I think there's a messaging issue with the profession that the students are choosing not to come and become accountants because of their perception of what an accountant is.
Right.
And if we look back, the accounting field's been through this change before. When I joined the firm to do a tax return, we used to fill out these gigantic green sheets, and we'd FedEx them to Texas, and 2 weeks later you'd get a tax return back. So they were inputting, it was called CompuServe or CompuTax or whatever, and they would input it. And I can remember, like, when I thought about my job, the drudgery or boring part of the job was that you were filling out these forms. Well, then the computer came along and we didn't have to fill out forms anymore. And that got replaced by higher value things that I could do for my clients. Now, I think part of the issue, especially on the tax side, is that the rules are so complicated. I can see young professionals looking at it and saying, it's just too complicated. Like, for me to go gain that body of knowledge, there's an easier path some other way. But I would tell people that they should look at the challenge of this journey to whatever their passion is. And if you have a passion for, figuring things out and detective work, and I mean, accounting is really interesting because whether it's at a corporate level or with an individual family, trying to figure out what the goal is, and then figuring out, well, what are the steps that I need to do to help this person assure that they can achieve that goal? It can be really exciting. So this AI thing, I think, is a little overblown because it's fear, right? Change is scary, but I think it's an opportunity for that young professional to say, hey, I can make my mark. And everybody's going to need this stuff. So it's not as if it's an industry, it's not, print film and, digital technology is going to wipe it out.
Yeah.
This is just, AI is going to enhance what you're able to do. And what took us, 10 years to gain knowledge, because we could only gain the knowledge incrementally because we were so busy filling out the forms and doing all that, the young professional will have the ability to gain that knowledge that much quicker and then be able to make big impacts for people's lives that much earlier in their career. So I think it could be exciting. And that's the message that I would say to the young professional.
And how many people, Bob, 20, 25 years ago told us who would go into tax? TurboTax does everything.
Yeah.
Okay, they'll wipe everything out.
They'll wipe everything out. TurboTax will wipe everything out.
Or the flat tax is going to wipe everything out.
Flat tax is going to wipe everything out.
That's right.
Neither of them did.
Yeah.
We adapted as a profession.
I love your answer, Bob, because that's the way I think about AI. I think AI, I look at that as an opportunity to be better, move faster through projects, get better deliverables.
Right.
this may be really self-serving to myself and my ego, but I think of myself almost like an artist. And if I have this AI component that makes me that much better, you're going to see some masterpieces that are going to come out of my ability to produce. I really think you will.
Ability to talk to those clients and get in deep with them, because you're not having to take all that time and just data gathering or whatever it may be.
I can do it faster. I can do it with more depth. I'm telling you, I can put together some awesome things. I can do it very quickly. Whereas right now, the cycle takes a lot longer because there's just more work that has to go into it. Okay, you guys have been so patient, and thank you so much for doing this. The very, very, very last question, because I've always thought, wouldn't it be awesome if there's a way that we could show our clients, almost like the Domino's pizza thing, your pizza, we're putting the ingredients on the pizza, your pizza's now in the oven, your pizza, like the tracker, and they could kind of watch us as we're working, like, little gnomes building shoes or whatever. But if there's one thing that you would love to tell all of the Wolf Group clients about things that happen internally that you wish they knew that we did, so that they could understand kind of, what they're getting when they work with the Wolf Group, what would be like one or two things you wish that they knew about our firm?
I would say that that one thing would be the level of integrity that we operate, within. We do what's best for our clients. If in the unusual circumstance, and thank God they are unusual, but if there's an error and we own up to that and we identify it, and it doesn't matter if the client recognized it or not. We'll go to the client and say, guess what? We made a mistake on your return last year. We don't do it often, and we have all these checks and balances to assure that this one happened to slip through. The client wouldn't have otherwise known. We could have gotten away with no conflict or concerns expressed by the client. But no, we'll say, look, this is going to save this client $1,500 if we go ahead and amend this return. So we're going to fess up and say so it's just an example of, I think, where we put integrity and what's in the best interest of the client above our our own
and we message that very strongly at the beginning of every tax season. I do it kind of in a funny scenario where I'll put up the Spike Lee poster, "Do the right thing," and I'm always telling our staff, like, always do the right thing. Don't ever try to sweep. That's where things go wrong. Always do the right thing at the highest ethical standards.
Yeah. I would say there are two things. One is sort of the broad messaging to the client, because over the years I've heard people say, well, I come to you guys, or I go to my accountants because they're going to save me the most tax. And I say, well, no. Your accountant's applying the law that's generating what the tax liability should be. You're coming to your accountants to make sure it's done properly and it protects you, so that you don't have penalties and interest or inquiries from the IRS and those kinds of things. And I think that's a message that the clients need to know, because we don't necessarily want the client who's coming for us to jump into every gray area and try and reduce that tax liability as much as possible, because that may put them at risk. So that's one. But the second one would be to explain the depth of contact within our firm. How many people touch every tax return? I think for some of my clients on the wealth management side, who are Wolf Group clients as well, they'll say, well, this person's doing my return, and talk about it as if that one person gathers the information, puts it in the system, prepares the return, signs the return, and gives it to them. And I will educate them and say, there's 6 or 8 people may touch this return, and it's getting reviewed, and at certain levels of income, it's getting a second higher level of review, because we take our craft seriously, and it's required that you have a lot of different touches to make sure that this thing gets done properly. And, client service isn't about just getting the tax return right. It's delivering it with expectations. What's the client's expectation of when we're going to do it, how we're going to do it, what notifications they're going to get. And I think we do a really nice job of doing those notifications. Now, the evolutionary step you talked about would be, and I know we use Salesforce as our CRM on the wealth management side, and you can move things through the different processes where they are. And I think you do that internally, but down the road, there may be an application where the client can actually see where is the return in this process.
Kind of like a mortgage almost.
Yeah. Now that's a little dangerous, because I think another thing that clients often think is, I submit my information and somebody starts working on it that day, and they submit it on, March 10th when you guys have 1,500 clients submitting their information at the same time. Well, that may sit for, 5 to 10 days before somebody's actually working on it. And I think sometimes it's hard for the clients to internalize that and realize that that's the way the process works. But once you talk to them and say, they got in 1,500 tax returns in the last 10 days, how they don't have 1,500 staff.
Right.
Things are going through a progression, and that's why we ask you for information early in the process, because it takes time, especially around the tax deadlines.
Right.
And to illustrate again how I believe we're different when we put our clients first is just identifying an error or having a group of people doing the reviews and all that. There's so many opportunities that come along that allow us to, for example, get a return out more quickly. But for the fact that we probably should look at that issue a little bit further, or we got to see if the client made an error in a prior year with a different firm, before they came to us. We'll take the time to do that, because we won't put our signature on a return that we don't feel confident is accurate in both directions, the government's favor and the individual's favor, right? I mean, we want it to be right, and the client wants it to be right for the most part. Whether they save money or they have to spend the money, they want their taxes to be done right. So, I mean, I would say 1 out of every 2 or 3 returns that we review, somebody will come up with something that needs to be investigated that I believe a lot of firms would just pass on. Get this return out tomorrow. The client wants it as soon as possible. I say, no, we got to make sure that we've got that classification right, or that this client didn't make a mistake in sending us this information because it appears to conflict with some other information that they sent us. So we'll get back to them. It slows the process, makes our job a bit harder. We have to put in more time. That's more cost to the firm, right? But we won't send that return out until everybody feels that it's as right as it can be. Doesn't mean we never ever made a mistake, but we really do our best to serve the client, I think, in the best possible manner, whether it's to our detriment to do so or otherwise, because that's our standard professional and ethical responsibility.
And if you don't do that, I think what happens is you could perpetuate a multi-year error. Right. We have the saying "same as last year" and then "wrong as last year," and it just keeps going and going. And then I see that happen with a lot of other firms, and then they come to us, and I'm like, "Well, you got a multi-year, 6-year problem here that we now have to figure out and resolve, and you're going to pay thousands of dollars to correct it." Whereas if you just paid, a fraction of that at the very beginning to make sure someone thoroughly analyzed it, you would have cut that off at the pass and saved yourself, all this heartache, heartburn, fun, money, all that stuff.
And within our niche, the international area is complex. And I think that, it's a double-edged sword that we have all this knowledge and we can talk about it like it's not that complex, right? We can explain things that are very complex topics in a way that it's understandable. And that may be to our disadvantage later on because they think it's relatively straightforward or easy when it's a very difficult area and complex. And it requires thought and time and all those things. Yeah.
Well, look, guys, thank you so much for doing this today. And personally, thank you for taking a chance on a wide-eyed kid back in 2016 to come in as one of your directors. I can tell you that was probably one of the proudest moments of my young career, was to get the offer from the Wolf Group. I was talking to some folks last night about kind of the transition from my prior firm to this firm. And I just view the Wolf Group with so much, especially when I guys like that, they're the best of the best. That's talk about boutique international tax firms on the East Coast. And, at that point in time, it came down to, I think it was like BDO, Markham, and the Wolf Group. And those other firms are just so massive. I felt like I would have just been another card in the deck there. And I was so excited to just get the offer to even be a part of the Wolf Group and, to be able to do what I've done with the Wolf Group ever since. And so I'm super excited to be kind of tapped to help carry with Jen and carry the torch, if you will, for the Wolf Group into the future. And so thank you for all of that. Thank you both.
Yeah. Well, thank you, Mish. We love what you're doing for the firm.
Absolutely.
Great.
Thanks.
You've been tuning in to the Essential Tax Podcast with your host, Mishkin Santa. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcast, Spotify, and on our website, thewolfgroup.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others.